Welcome to Momentum Monday. Today's October 16, 2022. Howard, are you watching any baseball? You're seeing.
I did, buddy. I was at the Pod. Were you? Was it loud where you were? The Padres. I went to the Friday game, and then yesterday they came from behind to beat LA. It seems like everybody in San Diego, it just hates LA so much. It's so funny, and so I'm happy for people of San Diego. They don't have a great history in sports,
Yeah,
and
it's a big
it's fun.
surprise. Yeah.
It's beautiful. It's a beautiful stadium. I had a ball. Baseball's too slow. The game was like 2-1 game was like 4 hours. So it's a reminder why I wouldn't go to a baseball game unless it was playoffs and good weather. But it's long to go to a base. Do you watch baseball?
I don't watch it, but I've been to a couple games this year. That's about it at the
Here's
stadium.
the thing. As someone who's watched a lot of baseball, if a game is 2-1, then the game should take 2.5 hours maximum. And so there's a big what do you call it, spread between 2.5 and 4 hours. It's just the game's got to get faster, but that said, it was packed, it was very loud, it was very exciting. Baseball's a very exciting sport, especially when the games are close. Anyways, it was fun. So yeah, Padres are moving on. San Diego is phenomenal as a city, as we all know. I'm super bullish on San Diego, whale's vagina, that is San Diego. You've seen Anchorman, right?
I don't think so. Maybe I should watch it.
Ivan, homework. Anchorman. It's Will Ferrell. He plays a newscaster.
Oh, okay. I'll watch it.
Oh my God! You report back to me there. I mean, how can a famous comedian like you not have watched Anchorman? And Phoenix is. I'm back in Phoenix. The weather's cooler. Speaking of cool, people just don't give a fuck about us. Like, what are you seeing, Ivan? It's depressing at this point because the momentum.
It's pretty choppy, and it's not a big surprise by now that all the inflation number, the producers price index and the consumer price index are coming pretty hot, and they probably continue to come pretty hot for the next probably 6 months, just on a year-over-year basis. Month over month, we don't know yet. And the market, we don't know how much of that is already discounted. It seems like on Thursday, when the CPI news came out and the market initially sold off in the pre-market, they were kind of gapping down.
Yeah.
And then you're gapping down after you're down 5-6 days in a row. It's a perfect spot if you're a short seller to at least take some profit. And what started as some profit taking turned into some, major short squeeze the rest of the day. But that was it. It lasted one day, and those big one-day moves are so typical for bear markets. The market came close to the declining 20-day, and then it was rejected again. So that's what we're currently seeing, a lot of chop to the upside, basically range-bound chop, really. There's not really follow through so far to the upside or to the downside. So it's kind of really hard to swing. If you're active, it's better to do it intraday, or maybe just use a smaller position, use some options so you know exactly how much your risk is. Other than that, it's really hard to dedicate to something longer term in this choppy mess. The new earnings season has just started, basically. I mean, with a few banks reporting on Friday, Domino's on Thursday. And so far, this is the main, I would say, silver lining that I'm seeing for the bulls, is that, for example, Domino's, they missed estimates, the revenue estimates and earnings estimates, and they still gapped up and rallied. Good reaction to that earnings report. And then the next day, JPM and the other bank, they also missed estimates, and they still gapped up and rallied. So we saw something similar last quarter.
But they also all turned around at the short-term 20-day.
Yeah, 50-day, yeah. That's true. But still, when you miss estimates, and then you...
Well, no, the market wants a reason to go higher because there's a lot of cash on the sideline. So you can see any kind of not sell-off. So I think what you saw, Ivan, is because everybody froze and stopped selling, they went up. And
yeah, but
there's no real
follow
through. Like, think about the tech selling that's going to happen in ARK. Like, think about the tax loss selling that could happen
But
like
ARK is what, 7 billion? Like it's not that big
it's tiny, but the
anymore.
stocks that she's in are not several billion. Meaning, yeah, she's a proxy for like all the bad investments that have gone on, and myself included. I'm not just pinning this on Kathy. I'm just not down 65%. You know, the 5-year Qs are beating her, right? Like, so think about all the fees that have gone on and all the time that she's gone down the media. That's kind of the stuff that bothers me. But I just think she's a proxy for all the tax loss selling that's ahead in the FANGs and in the growth stocks of the last 5 years. So I'm not even advising people do tax loss selling because I don't know, you know, every portfolio is different. I just sense that any small lift will be, you know, 2 days, 5 days will be met with selling. So I'm really like, I think the markets can go up. Like you see like you said, the financials generally will do well if tech is in a recession, relatively, right? So you can see that money wants to go to work. It just is going to look a lot different when everything's trading below its 200-day moving average. And let's go back to what we talked about for 6 months. We're below the 200-day moving average. Go pull up the S&P.
Yeah.
Like all this bad stuff's happening below the 200-day moving average. And we talked about it in August when they went up and touched it. I mean, what a great selling point. And shame on me because there was, you know, I probably should have put on some trades there, but I just don't trade. And kudos to the people that hit the 200-day because they've had a hell of a 20% move down. I don't know where the next 20% is because we're so extended below the 200-day and there's so much bad news out there. And so I'm not this doesn't feel like a great short setup. But then I look at Tesla and I'm like, if there was ever a chance to lean on it, this is it.
Yeah.
Right? Like,
earnings are this week, so
earnings are this week. Yeah, who knows the short-term direction? But man, if this is really going to get ugly, Apple, Tesla, Microsoft, Amazon, a lot of room to the downside.
yeah. Netflix also this week reports. They just said that they're going to come out with a ad-based model starting November. What was it, $6.99? I think that's a good idea because they're probably going to keep it.
It's mixed, Ivan. Like I own Netflix, and it's just like the smartest people I know think it's like you know, they're doing it. He's not. Listen, I'm not going to bet against Reed Hastings. You know, betting on Reed Hastings or betting against him versus betting on Jack Dorsey. You know where my money's going to go. So if I'm going to go into tech, I'm going to go into tech. Like, and I've been wrong in the last few months, but going into tech with people that have hundreds of millions of subscribers and some experience in some downturns and seeing their stocks down 50% before. Where I'm not going to go is into low margin, you know, businesses like fintech with founders that have only seen a bull market, you know. And Square is a perfect example. I mean, I can't think of a more poorly run business. You know, the founder was doing 2 companies using a tight margin business in a rising interest rate environment. And he's a Bitcoin maximalist, and he overpaid for BNPL where the regulations are just going to come out. It makes me nervous. I sold my PayPal. Like I sold my PayPal last week.
Yeah, I actually shorted it on
So
Monday.
I sold mine in the mid-80s. I'm like, you know, I've been riding it for a couple months just seeing. And there's so much pressure on these companies because of low margins and they haven't figured out their you know, they have great products. It's not, I'm not saying Square doesn't have a fantastic product, but it's low margin, high competitive business. And, you know, like, why not own Schwab? I don't own Schwab and I hate them actually, but like, how do you not own Schwab over Square? Like, or how do you not own JP Morgan as much as you may or not like Jamie Dimon? And I don't want to own JP Morgan, but I'm just going to go bet on people that understand banking and interest rates and the macro and how to play the media a lot better. So the pickings are slim. Is there anything look interesting to you other than it? Like,
there are just a few biotechs, but as I said, they're so volatile. It's really hard to own an individual biotech. And overnight, it can, you know, gap down 80%.
but what's the index do on that rally? What the XBI do?
The same. It tried to rally. It kind of gave back a lot on Friday, as most stocks did. So we're currently in a very high correlation environment.
Yeah.
So even if we see like a 10%, 20% bounce in the indices, in the S&P 500, I think it makes more sense to play it with an ETF. Like if you want some more,
Oh, yeah, bear markets, you should be ETF.
you can use a leverage ETF if you want like a bigger move.
Yeah,
But with
totally.
earnings season in the next, what, 7 to 8 weeks, and this choppiness and high correlation, it's kind of hard to
Yeah. The
stock pick.
less we talk about the market, the better. Because right now, if you believe in the market, so I had Jim O'Shaughnessy on my podcast. You should actually listen to it because you're young.
I think I did. I listened to some of it. Yeah,
And
it
you
was
know,
interesting.
yeah, tactically, he's right. Like if you're in your 30s, tactically, this is a fucking bonanza. If you look at the Qs or the S&P, right? In a bear market, you go to low cost ETF investing. I'm like, man, if you have a job, you weren't saving before, this is the moment to start saving and taking some risk because you are a time billionaire, right? Profits will reappear, growth will reappear. Will it be at S&P? Will it be at the Q's 180? And if you start averaging now, you're going to average in on a price at 220 over the next year. So it's like you hope for 180, right, on the S&P, the March lows of 2020. So you're rooting for that. Like you want to like be that guy that says I'm always the top at this point and start buying the QQQs. Now, if you're 57 and you're Howard, it's like I'm not trying to time the market, but I don't want to fucking take another 50% drawdown. Right.
You just buy T-bills, make 4%.
T-bills at 4%. Like people are going, oh, inflation's 8%. Inflation doesn't affect me like it affects everybody else. My mental state affects me because I'm a time thousander, and I just don't want to aggravate myself. But if you're young, the worse the headlines, okay, the more excited you should be. When you're my age, the headlines are the headlines. They matter because I don't have the same 20 years to recover. And I'm about wealth preservation, not accumulation. So people ask me all the time what I'm doing. And I'm like, man, I've been 70% cash for a year because I have so much risk elsewhere. And like 4% just sounds so appetizing to me, especially compared to being down 20% on the year. So, it depends on your age. Whereas if someone asks me to manage their money in the 30s, I'm going to be buying. I started last week. I called myself the nibbler for a day on Thursday. You have to pick your spots and you can't just buy every day, but like there was a level of fear that made sense to me. Now, if I go, Ivan, and look, and I agree with you, like as someone who's tactical like you, there's just going to be better odds. But if I can share my screen, I'll show you a few charts.
Okay, let me stop sharing. Now you can go ahead.
Are you seeing my screen?
I'm seeing you.
You're seeing me, so I got to share my screen. All right, can you see me now? My screen?
We're seeing your Twitter, yeah.
Yeah, so here, do you see this?
Yeah.
Something going to break. I've been talking about this for a few months, and we're now, assuming this chart's even good, but it is, the U.S. trade weighted dollar. Nothing good. From a crisis perspective, we are so lucky to live in America, and everything's rigged in our favor. But we are putting so much pressure on the rest of the world with our strong US dollar. That's what people don't understand. Like being in America is so good that we're breaking the system elsewhere because people have to pay us back in US dollars. So anytime we've had this kind of spike, you're going to have some kind of implosion. Now, right now, you have the risk of like all this debt that's owed to the US increasing at an exponential rate. You have UK focused on their own internal pension problems, so they can't focus on anything except saving pensions. That's a huge economy, right? You've got China off on its own, and you've got the war in Ukraine, and Europe's focused on energy right now and getting through the winter. So this is when you get crises. Now, are we in the middle of it or the beginning of it? No, but man, this is like a 10 for 10er on this chart over the last 10 crises, and they all came from rising US dollars. That doesn't mean this will be the one time it doesn't. So that chart matters to me. Charlie's had a bunch of great charts. I mean, if we look at the 3-month T-bill, right? This isn't good. The rate of
from 0 to 4, yeah, wow.
Yeah, the rate, it's not the 4%. The world will do fine in a 4% US 30-year mortgage world. It will kill, it will crush. You just got to get used to that. But this rate of change from 0, there's so many people, we don't know the unintended circumstances of what that's going to do. Another one from Charlie that I thought was interesting. This one, years in the S&P that we've been, so this year is already, so for people like that are freaking out, okay, you got to have some perspective. I think we can cross out Great Depression, right? We're a much richer nation. We've got a lot more knowledge than we had, and a lot more tech. We went through a pandemic and slackens, it's hard. I'm not saying it can't happen, but like people that are freaking out and going to their bunkers are just stupid, because we just survived a pandemic where no one worked for 2 years and the government figured out how to put money in your pockets. They'll do that again if they have to. And by the way, it's easier for them to do that now than they had to before, because rates can be cut, so you got 2008, 1937, 2000, busting of the bubble. So the most likely scenario is the 70s, 80s type thing, where high inflation, and it's just not a good market cycle, right? So Charlie's got a lot of good data around how this works. So I think those are the two that matter to me. Is as much as I'm not a macro guy, sometimes the macro is important.
Yeah.
And I can't think of other than 08, when we were all watching, we just didn't know if our ATMs were going to work, and we didn't have Zoom and Slack and all these great products to conduct business. So I don't think it's as bad as 08. I just think this US dollar is going to cause a lot of
Look
chaos.
at the US dollar in 08 from July to pretty much November, and then it topped in March when the market bottomed, basically.
Yeah. So the good news is you shouldn't panic right here. If I don't feel like it looks like everything's about to break, but we've also come down so fast that it just seems too obvious. The other thing that's funny is how popular Jim Cramer is. Oh, I gotta share my screen. Or hey, people
You
are
want to share again? Okay, go ahead.
Yeah, let me share. It's really funny because I've never mentioned him on this show. But some reason every day in my feed Jim Cramer trends. I didn't know it was so popular, so hated. I can't tell if he's hated or popular. And so he's fighting all day. Go look at like some of his stuff, which I hadn't until recently. He's been trending in my stream all the time. So I click over and it's just chaos. It's just people hating on him. And there's like an inverse ETF. Did you read about him? And I just think it's too easy to pile on. Love him or hate him. And I lean to more of the skeptical eye of Jim Cramer.
Is he getting a cut of the fees?
It's not that. He's fighting with people on Twitter. I mean, so he's part of the problem. Like he's like a child, or is like some kind. He compared himself to Putin and how much hate he gets. So I just think I stopped sharing it. I just think that everybody's on edge. Everybody's making fun of everybody else, and I think people got to remember it's a bear market. Very few people have had great years, so I think we should all go easy. Like in myself, I've been so high cash and just get lit up in whatever I've owned. So no ego in this. I'm just trying to figure out.
Are you at least getting better deals in the private?
No, I mean,
no.
So I'd say that the private markets are so much worse shaped than the public markets because there's so many walking, underfunded, and overfunded companies that are just so much misallocated capital that's in the private markets. The public markets, okay, Zoom's not working, I'm wrong, Microsoft, for whatever reason, Team is kicking their ass, better product or not. But you know, the private markets, why would I invest in the next Zoom when Zoom can't be Zoom, right? Like, so, you know, the private markets are continuing to like spin in this imaginary growth wheel because the money was raised and not put to work, and it will get put to work, assuming LPs meet their capital calls, Ivan. So that's where '08, that's the wild card of '08, is people called their you know, Goldman and all their growth guys and said, don't fucking call capital. We're not there yet. People have capital, and so this is a different type of crisis. And Goldman's at $300, not at risk of going to zero, but there's leverage in the system somewhere, and this dollar is going to find it, and the rates are going to find it. Like, look at all these bad business models that blew up really quick, like Carvana. That was never even designed to work.
Yeah.
Right? And think how many people are holding the bag in some of these things. Right? This was a product that was losing money on every great product if you were the seller, if you were selling your car or buying your car, but not a great product for shareholders, right? And
well, it was great for a while. It went from 10 to 340. That's 30.
No, but
34
the insiders owned it there, and they distributed it to all the you know, retail over those few years. And I'm just saying, there's a lot more Carvanas out there that just don't have a great business model, and now the growth will not be there, and the growth capital will move into other areas like we've been talking about, energy, and so there just won't be that capital for these companies. So, anyways, hopefully that helps. I appreciate you, like, you've just been very simple here, and you've been right, like, just do less. You're probably 100% cash or leaning short.
I am in cash, and I just take the occasional intraday and just a short-term swing with an option.
And how are the people around you that like read your stuff? Is everybody just bored and like antsy?
I mean, most of them are happy just with the general guidance that I gave, and that's about it.
Yeah, I think you know, I think we've gotten the general bear market right, and when in doubt, you got to look at the 200-day moving average.
But if we have another, let's say, worst case scenario, another year of bear market, I think that's the best thing that can happen to you.
The good news is you're halfway through it time-wise, right? Historically, we're coming to the end time-wise of bear markets, unless you pull up the Great Depression. So if we're still here talking about the markets below their 200-day moving average in a year, we'll have one viewer, and they'll be
it will probably take a year for the market to recover above, but as I said, there'll be so many new bases in stocks. There'll be the next time, you know, when the new bull market starts, there'll be some stocks that are already near 52-week highs and, you know, setting up and, you know, ready to break out. Right now, there's nothing.
We were seeing them until recently in biotech and solar.
A few, yeah.
Yeah, but I'm saying that turned out to be not quite a good signal because the market's so heavy. But if you're right, if we stay below the 200-day moving, the relative strength will really start showing up in sectors. And it could be banking. It could be
they don't lose too much money on bad credit. They should be printing money with the rising interest rates.
So if I look at Schwab, I mean, they're printing money. They're not paying it out to anybody, and their deposits are making more money. So Schwab's almost a perfect business. Plus, they have no competition. They've worn everybody out of business. So there are great businesses. It's just battling that, like, overall, you know, money coming out of the market is really what people have to understand here. All right, buddy. Have a great week.
All right, Howard. See you next week.
Yeah, bye.
Bye.